All right, let's jump right in. Today we're tackling one of the biggest economic stories on the planet, Japan's once-in-a-generation shift. And believe it or not, this whole story kinda starts with an apology over a popsicle.
So to really get what's going on, we have to start with this, honestly, kind of a bizarre story that just perfectly captures how different Japan's economy has been for decades.
So back in 2016, a company called Akagi Nyogo did something you just don't see in most parts of the world. They actually took out ads and filmed a commercial where all the company executives are bowing in this really solemn public apology.
And what was this huge transgression? What were they so deeply sorry for? Well, they were raising the price of a popular ice cream bar for the first time in 25 years by just 10 yen. We're talking about 6 cents. That's it.
You see, that single apology tells you everything you need to know about a national mindset where prices just don't go up. But now, that entire reality is being completely flipped on its head. And to understand why this is such a huge deal, such a seismic shift, we gotta rewind a bit.
To really get why a 6-cent price hike needed an apology, you have to understand how Japan's economy was basically put into a deep freeze for 3 whole decades. This created a world where stable prices weren't just the norm, they were a deeply ingrained expectation.
You know, back in the 80s, Japan's economy was an absolute titan. It looked unstoppable, like it was going to overtake the US. But then, this massive asset bubble in stocks and real estate burst. And it didn't just pop, it burst spectacularly, plunging the entire country into this long economic winter that we now call the lost decades.
And what that crash did was unleash this really insidious economic disease, deflation. Now imagine this. An entire generation of people in Japan grew up in a world where prices never rose. In fact, a lot of the time, they actually fell. For most of us, that's a completely alien concept, right?
So to fight this, the Bank of Japan launched what has to be one of the most extreme monetary experiments in history. I want you to think of it like they're trying to warm up a frozen room. They cranked the heat all the way up, pushing interest rates to 0. And then, when that didn't work, they went below 0, negative interest rates. They started pumping insane amounts of money into the economy, buying up mountains of government bonds. But here's the crazy part. Despite all of that, the room stayed stubbornly frozen. Price tags, salaries, mortgages, nothing would budge.
So if this massive experiment didn't work, what finally broke the 30-year spell? Well, it wasn't anything Japan did internally. It came down to 2 massive shocks from the outside world. Shocks that Japan, as a country that relies so heavily on imports, had no choice but to absorb.
First up, you had the global economic whiplash from the pandemic. Just as the world was dealing with that, bam, the war in Ukraine hits, sending energy and commodity prices through the roof. And for a country like Japan that has to import most of its energy, well, it literally had to start importing inflation.
And this chart, wow, it just perfectly illustrates the impact. Look at this. For decades, inflation was stuck right around 0. And then, all of a sudden, it just takes off, peaking at 4.3% in 2023. That's more than double the Bank of Japan's target, the very target they've been trying to hit for years.
So Japan finally got the inflation it had been trying to create for so long. But it pretty quickly turned into a classic case of be careful what you wish for. The shock to the system was immediate and it was profound.
This absolutely forced the central bank's hand. In what was a landmark decision, they raised interest rates for the first time in 17 years. This was it. This was the moment they officially ended that massive, decades-long monetary experiment. The Great Freeze was finally, officially, over.
But, and this is a huge but, there was a massive problem. Okay, so prices for everyday things like rice and eggs were going up, sure, but wages, they just weren't keeping up. As you can see right here, when you actually adjust for that inflation, what we call real wages, people's paychecks were actually shrinking. They were getting poorer. And this created this incredible squeeze. Think about it from a small business owner's perspective. Suddenly your costs for everything, raw materials, packaging, you name it, are going up. At the same time, you're having to pay your staff more just to keep them from leaving. It really became a pressure cooker environment for them.
So, all of this leads us to where we are right now. Japan is facing this incredibly high-stakes gamble, and its leaders are tasked with steering the entire nation through this really treacherous transition.
You know, the funny thing is, a little bit of inflation is exactly what Japan wants. The goal, which you see on the left here, is to kickstart a virtuous cycle. Prices rise, so people demand higher wages, and when they get them, they spend more, and the whole economy grows. That's the dream.
But the reality, on the right, is that wages are lagging behind, and that breaks the cycle, threatening the very stability the country has known for decades.
And to make this whole gamble even more complicated, you have Japan's national debt. It is the biggest of any advanced nation in the world. We're talking over 260% of its entire economic output. It's a staggering number. And the problem is, when you raise interest rates, it makes paying the interest on that massive pile of debt much, much more expensive.
And what's really fascinating is how this economic shift is fundamentally changing the mindset of everyday Japanese people. It's truly a society in transition. You have a large aging population that relies on fixed pension incomes, and they're really feeling the squeeze. At the same time, you have other people adapting in ways that would have been unthinkable just a few years ago. They're pulling their money out of traditionally safe savings accounts and putting it into the stock market to try and protect their wealth. And that very shift is a big reason why Japan's stock market, the Nikkei, has been hitting record highs.
So in the end, it all comes down to this really profound question about the nation's future. Can Japan actually manage this transition and recreate the kind of dynamic, vibrant economy it had back in the 80s? Or is it risking the stability it's known for so long for a future with growing inequality? You know, from a simple 6-cent apology over an ice cream bar to a potential economic revolution, the stakes really could not be higher. And you can be sure the whole world is watching.